welcome to today's pre-market video, which is called Don't Miss This Hidden Shift in Equities. I'm hurrying up to get it out to you as soon as possible before CPI because there is a notable development in the equities market that I'm seeing, so let's dive right into it. You know pretty well my site. Thank you very much for liking these videos, it helps greatly. Just join the channel because I'm posting at various times during the day. Let's start with the yields chart. You see that we had received undershoot in PPI, yet yields have refused to collapse. And this is against the backdrop of potentially doubting about the pricing power of companies in passing rising costs, because look at where commodities, oil products such as gasoline or diesel, meaning heating oil, search for heating oil if you want to see diesel, have been traded in the respective period for which we are going to get data announced pretty soon. And this is telling in itself as far as rate cutting goes. And it kind of lines with the relative resiliency of S&P 500 versus these rising yields on the long end, because you see the overlaid chart, which is the 2-year yield, has been refusing to track to the upside the rise in this 10-year yield lately, last couple of trading days. A few words about gold, silver and miners. They did see some success on the upside yesterday, meaning in retracing the pre-market drop, and even though they have not gotten pretty much anywhere, have a look at how well miners have been doing on a daily basis, and this, in my view, highlights potential dynamic following the CPI experience in gold and silver rising, or at least keeping their pre-market gains intact. Compare against oil, that would be having trouble keeping its lofty levels as the inflation hedge comes off, no matter and regardless of the fact that I expect CPI to turn out relatively on the hotter side. So that is the dynamic that I'm looking at closely when it comes to real assets, and that I had updated trading signals clients already about through their premium gold and oil chiefly, talking silver as well, of course, Telegram channel dedicated to them. Back to equities. This is the daily chart of S&P 500, and you see notable improvements in market breadth, and the daily candle hints at unsuccessful push lower, and we had seen quite some resilience already pre-market, meaning that I would prefer to be erring on the side of the dip, the yesterday talked rug pull on CPI being relatively short-lived, even if the figure is going to come on the hot side. We may have seen the bulk of rejection of higher prices in paper assets already yesterday, when the PPI spike had been hammered down relatively fast, and of course their pronouncements later in the day didn't add much to the risk sentiment before the close. So percentage of stocks trading above their 50-day moving average is one of my favorite breadth charts, and there is a notable improvement as this overlaid chart reveals, and that's one not to ignore. There is budding improvement under the surface. Can we retrace to the downside one more time? Oh yeah, of course. and it might be so that an initial CPI shock will search for buyers, and it will be meaning the initial hot CPI shock would force prices to come down fast, and buyers will start emerging possibly within a few short minutes. Maybe it would take longer, and we would see the flush continuing a little bit after the opening bell as well. But the table is set for the dip being and getting somewhat bought, because, and that's visible from these two latest two candlesticks, we had seen quite successful defense of the support, which corresponds to quite a few October and November levels. If you draw a horizontal line and expand it into a support zone, looking for where most of the volume had been traded, if you fire up your own volume profiles. So that's the market breadth development not to ignore, and shortening the period of the moving averages to 20 only reveals quite some buying power under the surface, and that's why for the hours ahead I'm looking for the bid to start emerging. Yes, this is counterintuitive, but we may see kind of an internal cleansing, you can call it, if you are into health sciences as well. Some kind of a cleansing experience. We finally got the hot CPI out of the way, and the budding improvements in market breadth can keep on building. We are close to the start of inauguration day, and that could mark more of a positive sentiment returning to equities, only on the psychological side. So that's the dynamic that I would like to highlight, and that concerns as much the latter part of this week as it does today's CPI. So I'm rather looking for a bullish surprise when it comes to the following couple of 4-hour candlesticks, meaning I'm not talking about 15-minute ones or 30-minute ones or even hourly ones. So let's see whether the buyers will start catching some more breath, as this breath chart is indicating they are trying to, and under the surface succeeding. So that was for the introduction of what I expect. One more slide highlighting positive positioning when it comes to interest rate sensitive sectors. Usually it is real estate. We see them strengthening. This is kind of mirrored with Russell 2000, and as well financials finally got a boost. But most importantly, what I was looking for to happen on the weekend, that was for materials to start rising strongly and to accompany energy oil stocks, and they truly did. So this is pointing to paper assets gaining later today. So let's see whether this expectation plays out, and let's trade what actually happens. Thank you. Obligatory disclaimer, you know everything, and let's hurry to get the daily analysis out for you as well.